Hello everyone, welcome to a new video. Today we'll be analyzing one of my favorite REITs, which is no other than the company WP Carey. Moreover, its results for the third quarter of this year 2020 were just published this past October 30th, which means that we have super fresh information to be able to do the analysis based on what is currently happening with the company, which I think that it's super interesting. And with the analysis, my goal as always will be to create a very good overview of the company and the stock itself in order to see if it could be a potentially good opportunity of investment or not. Anyways, before we go into the analysis, let me briefly give you an overview of what will be discussed in this video. So first, as always, we'll be having an overview, a general overview of the company WP Carey with some key metrics as well that they just published recently. Afterwards, we will be looking at the stock price and other characteristics of it, followed by the financials as well, the ones that they recently published, and finally I will be giving my personal opinion on the stock and a potential future entry point in case we were interested in investing in this stock. So with this out of the way, and after I remind you that the best thing you can do if you enjoy the video is to give it a like as it helps me out tremendously, let's go for it. WP Carey was founded in 1973 by William Paul Carey, and it is a real estate investment trust, so a REIT, that essentially focuses on acquiring and then managing properties in different sectors like industrial, warehouse, office, retail and self-storage ones, and then they rent them to single tenants under long-term net leases. In other words, they essentially buy and then rent these properties out. And in total, at the moment, they own 1,215 properties that they have in their portfolio, which are rented out to 351 different tenants at an average of 10.6 years of lease terms. Moreover, they have an average occupancy of 98.9%, and the total annual rent that they receive totals $1.2 billion. But what type of properties do they exactly have, and how are these properties distributed geographically? Well, let's go and have a look at that as well. Geographically speaking, we see that 62.8% of the properties are located in the United States, 35.2% in Europe, and the rest in other parts of the world. And these other parts of the world, looking at the map that they have published in their investors page, I'm assuming that these other properties are located basically in Japan. Looking now at the property types, we see that they focus a lot on industrial and warehouse, with these two together representing around 47% of their portfolio, followed by offices with 22.6%, retail with 17.4%, and self-storage with 5.1%. Afterwards, just having a quick look at the diversification in terms of industry, we see very good diversification, although retail stores are the most predominant one with 22.6%. Finally, just to close this part of company overview, and if we look at the top tenants of WP Carey, we see that there are very well-known ones such as, for instance, U-Haul, Metro or Marriott, and it even surprised me that its third top tenant is actually the government of Spain. Altogether, they represent 21.7% of the total annual base rent that WP Carey collects, which I think that it is quite good as these do not represent a very big part of their revenues. So if now all of a sudden these 10 top tenants that they have were to all go bankrupt for some reason, they would still collect 80% of the rent for that month. I mean, assuming of course that the other ones also pay, which is very good because it means that they don't depend just on one single company, but they are very diversified with many different ones. So giving a short conclusion on this section, part of why I like WP Carey so much is because they are very well diversified, not just geographically, but also in property types and sectors, which is something that as an investor, the fact that it's so diversified, it lowers the risk. Moreover, something that I really like about WP Carey is that it's very well diversified geographically, as we said, with 30-something% here in Europe, which is something that you often don't see in REITs trading in US stock exchanges, because they mostly operate within the US, sometimes as well Canada, but they are not so diversified geographically. Now, just to end with the introduction, let's go and check the rent collections, which have been something super important for all REITs, especially during the past months of this pandemic. In their case, this quarter they collected 98% of the rent, which is very good. And we see that the sectors that did not pay were the fitness, theaters and restaurants, with only 65% of the rent collected in this particular sector. But as we saw before, this represents a super small part of their portfolio, so it hasn't had such a big impact. But after this introduction, let's go and check its stock. WP Carey is trading in the New York Stock Exchange under the ticker symbol WPC, and at the moment of recording this video, its stock price is at $62.61 per share. We also see that since the crash of March, it is still trading at very attractive levels compared with pre-crash ones. Also, one of the best parts of REITs in general is that they are obliged by law to distribute most of their profits among its shareholders in the form of dividends, which is something that also happens with WP Carey. In their case, at the current price, they have a dividend yield of 6.78%, which is of course very nice, although its payout ratio is currently standing at 122.82% based on the last earnings release, which is of course not good because they are using more money than they make to pay their shareholders. Nevertheless, on the other hand, it is true that they have actually been paying an increasing dividend since 1998, as we can see in the graph in the screen, so they are certainly committed to paying these dividends. And now stepping away from it and looking at its stock graph since 1998, we can see that historically they have been a great investment and have been following a clear uptrend. In any case, it is time now to go and check its very recent financials. Focusing first on the income statements, we see that this quarter has been better than the previous one in terms of revenue, and looking at the previous quarters, we see that it is more or less in line with how it had been performing. And this increase in revenues has also led to higher net profits reported for this quarter, with a total net income of $149 billion, which has been much better than any of the past 5 quarters. Furthermore, looking at the historical performance, we see that during these past 4 years, it has always been reporting profits and gradually increasing them, although in 2019 they had a bit of a drop. But let's leave now the income statements aside and focus just on the balance sheet. Looking at it and comparing it as always with their assets, we see that they have a very conservative debt ratio of only 51.46%, which is much lower than many of its REIT peers and other companies. So we see that they have a very nice balance sheet. After now having checked many of its metrics, it is time for me to give my opinion on the company. Personally, as you have already more or less guessed and I think seen throughout the video, I like almost everything about the company except for one thing. And this one thing, you might already have guessed it, but it is the payout ratio, which is way too high. In order to solve this, if I were the CEO of the company, I would certainly do more share repurchases in order to lower the shares that are in circulation, and then with it also lower the amount of money that is paid out in dividends every single quarter or year. But in fact, if we check more in depth this topic, we see that they have been doing the complete opposite to what I have been just saying now, and adding more shares in circulation since the same quarter of this previous year, which to me doesn't make much sense really. I mean, this makes sense in order to get more funding, to be able to buy more properties, and then generate more revenues and so on. But as we saw before, their balance sheet, they have a very low debt ratio. So maybe instead of having, sold more shares and added more shares in circulation, they could just have gone to the banks and asked for a credit. But as I said, again, I'm not inside the company, I'm not the CEO of it, and I'm sure that they know much better what they are doing with it. Just that it surprises me quite a lot to see this when it's certainly not something that I would be doing. Anyways, despite this, I still think that they have a very attractive dividend yield of, as we said before, around 6.78% at the current price, and despite the issue with the payout ratio, I don't think that this dividend is at risk of being cut, because certainly they do not want to cut this winning streak that they have had for the past 20 years. And as well, they are also very diversified, as we saw before, geographically, in sectors and so on, which is something that I very much like. Personally, I currently own 13 shares of this company at an average buying price of $65.62 per share. And the question now is, am I looking to add more to my portfolio? Or more differently, if I didn't own any shares of WP Carey, at which price point would I be looking to get in? If we check the graph since the crash of March happened, we see that it had a support around $63 per share, which it just broke this week. So now going forward, it is a bit uncertain. It could be that it keeps falling until the next support level, which is around $59 per share, or that it recovers and goes back to the $67 per share that it was trading at before. So my approach to it would be to wait for a confirmation of the support because there's a lot of volatility these days in the market. Elections are just coming up. We saw this past week a lot of red days. So I certainly wait a little bit to see where it ends up all going and to wait, as I said, for some support confirmation. But on the other hand, looking at it from a long-term investor perspective like myself, I already think that the stock is at very attractive levels at the moment, and I mean, if you think that this stock will do great in the future, then you might as well already get in. Of course, it's always better if you can get in a bit lower, but these are things that you never know. Anyways, you can just wait a bit this week to see how it all plays out with the elections. Anyways, I just want to emphasize that these are just my thoughts and opinions, that at the end of the day I'm just a guy doing videos on YouTube, and that you should always do your own research and diligence before investing in this or any stock. In any case, that was it for today. Please let me know your thoughts on the stock. Do you find it interesting? Are you planning on adding shares of WP Carey in your portfolios? You can let me know in the comments below. I would love to hear from you. If you enjoyed the video, then please don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.